Hello everyone and welcome back to my channel. As of every week, we will dive into the fundamental, sentiment and technical analysis of different currencies, and we will combine different currency pairs to see which opportunities will come during next week. Now there is some nuances that I added to the strategy, plus in addition to the seasonality and COT data, I added something called valuation, and I will explain it now when we come into the valuation section. First, let's start with the data that we have. This is the updated data as for today, January 4, 2025, and my analysis gave me that the pound is still the strongest, Japanese yen is improving, US dollar still very strong, euro dollar still weak, Australian dollar still weak, and Swiss franc still weak. So now what I added, the nuance that I added is this is next week data. So there is no data for the New Zealand dollar or high impact news for the Japanese yen, which will give me an idea that the currency pairs that I will be looking at are combined from currencies that have data next week. So what I will be looking at is pound Australian dollar, pound CHF, pound euro dollar, USD euro, USD AUD, and USD CHF. The Canadian dollar, I will not be touching it right now, maybe during the week, but let's focus on these 8 different combinations of currencies. So if I go to the indicators, on Monday we have retail sales for Swiss franc, Euro PMI, Pound PMI. Tuesday, Swiss franc inflation data. So during the retail sales, I will not be trading because there is Swiss franc inflation data on Tuesday. So the high day, the important day for me for the euro and the Swiss franc will be on Tuesday. Wednesday we have the Australian inflation data, and Friday we have the Canadian and US labor market. Very important week. Euro CHF data, inflation data on Tuesday. So Tuesday will be a very important day to have positions in, for example, Euro Pound or Pound CHF or USD CHF and Euro USD, but we need the technical to align and the data also to align. If the data comes positive for these currencies, I will wait a higher retracement in order to get a position in. If it comes lower than forecasted, I will be looking for entries to go swing trade. Also, I will be looking for some scalping positions on my FTMO account. Now let's come into valuation. This data, I studied it a little bit. I'm not yet familiar a lot with it, but I'm using it as a confluence, as the seasonality, the COT data, and I will come back into some central bank's balance sheet to see during the next weeks how I will incorporate the central bank balance sheets into the strategy, because they are much important. They are the money supply for the markets. Also we have the TGA and the reverse repo, but I'm not yet lot familiar with it. I'm sticking to what I know right now, and I'm still learning week by week to improve myself, and hopefully 2025 will be a changing year for me. So if the real effective exchange rate is above 100, it's overvalued, and if it's below 100, it's undervalued. How I use it? You need to manage it with the inflation data and the GDP data. So for example, US dollar is giving me overvalued for the currency, but if inflation is still moving higher and the labor market is strengthening and the GDP data are strengthening, it might stay overvalued for a while. Let's take an example of the Japanese yen. Japanese yen currency is undervalued. If the data starts to become better and better and better, it will be a huge long position on the Japanese yen. So it will be, for example, a short position on Euro JPY or AUD JPY. But we need, as I said before, data to come out for example, the Australian dollar. So AUD JPY will be a good pair to enter a short position when the inflation data of the Australian dollar comes out, so on Wednesday. Now, let's jump into the seasonality. Different seasonalities, if we look into this area right here, this is the average change of the XY index. It will be somewhat bullish, just the 5-year is negative. So the average will be a bullish month. Going into Euro, the average will be a bearish month. So if I wanna take a Euro USD position, short position, the seasonality supports this position. Going into the COT data, the COT data did not get updated yet because of holidays, but previous week COT data, the Euro, the large speculators added shorts and long positions, but still the net short are higher than the net long positions. The Japanese yen also added short and long positions. Swiss franc added short, closed long, so they are becoming more bearish on the Swiss franc. Australian dollar added 5,000 contracts and closed 1,500 long contracts, so they are bearish on Australian dollar. So the sentiment for AUD is bearish. The sentiment for Japanese yen is somewhat bearish. We might wait for the COT data to change in order to take a short position on the AUD JPY. But let's take an example of US Swiss franc. They are adding short positions, closing long positions, and right here longs are added more than shorts. So USD CHF from the COT data standpoint is bullish. Go right here. Swiss franc is somewhat bullish during the first month of January. So this seasonality contradict what fundamentally is happening on USD CHF. So hopefully on January we might see a bigger retracement on USD CHF. Now let's jump into the technical analysis of different currency pairs that I will be looking at during the next week. First currency pair, we have the Euro USD. Now we will start the technical analysis of the Euro USD. Fundamentally, we are short position fundamentally. Okay, like this. Now I want to do something small. Let's see, 100. Okay, now if I want to take a short position on Euro USD, I need the price to be as much possible near to these levels right here, which are the 100 moving average, 200 moving average, and this is the 5-year moving average, but I use it for reversals, positions, and standard deviations. I don't use it for continuation. So from this area, we were starting to see some bearish trend on the euro and some bullishness on the USD hit the fair value area as I see it, and started going lower, then retested the moving averages and continued pushing lower. Also, if I want to take positions, this 100 is where I would like to see some rejections, and it will be at 100 pips moves. Okay, so let's say we have right here the 107 area, key price. Okay, like this. We have the 106 area, we have the 105 area. So the most important areas are the ones that are near the moving averages, and now I start to see some areas. For example, we have a supply zone right here. Also, we have a huge area of resistance. Okay, so these are key areas that I'm looking to enter from. Now, if the data on a Tuesday comes very bad for the euro, there might be a continuation to the downside. There might not be a retracement to the upside. So I start to look at the 104 area and the 105 area. So I just jump 100 pips areas just to be clearer and smoother when trying to enter the markets. When we hit different areas, I go to the 1 hour time frame, and I look for retracement into the this moving average or a shift in market structure. So for example, right here we have high, low, higher high, and lower low. Might be an entry, and this will be my stop loss. And if we are above these moving averages, it would be much better for us, because it means that on the 1 hour time frame we are above fair value as moving averages. So we are above what is the 100 and 200 average. It means that it's a good idea to take a short position. Coming into the euro pound, I'm still bearish on euro pound, but as you can see, there was consolidation. Also, this for the grid, I do it to see, so 50 pips jumps, okay, like this. So what I do, every 50 pip, it will be a good area to enter from. So we have right here 38, we have the 38,500, and we have the 48. Okay. So these are key areas to enter a short position from. Now, from this area, we have the moving average, and we also have an area of consolidation and a recent resistance. Okay, so this is a clean area to enter from with the right sentiment, and sentiment comes when economic data is coming out. We see how market is pushing. Another area is the supply zone right here. So it doesn't matter if it's supply, support, or resistance, or Fibonacci. It doesn't really matter for me. Moving averages with the grid, so great key psychological prices, and support, resistance, supply, demand zone. It doesn't matter for me. So this is another trade idea that I am looking at. Now let's jump into the CHF pairs. So USD CHF. Coming into USD CHF, what I will be looking at first, 1 year and like this, 1 year. Okay, so they jump 100 pip, 100 pip. So on the JPY pair, they might jump 200 pips, 200 pips. Okay, now if you watch previous videos, I would have been entering from this area with the experience that I have right now, but I was learning, and from this I don't forget it, because everything was perfect. USD CHF fundamentally was bullish, sentiment was bullish, inflation data came out right here, positive for the US dollar. They did the low, created swing low and 1 hour shift in market structure. We hit the 200 moving averages in a demand zone, and as you can see, price was running to the upside. So everything was perfectly aligned. I did not take it because I was not experienced yet in the markets. Now, since I know that it will jump 100, so I have area right here, but I want it to be very close to the moving averages, and the 5-year moving average will be a psychological level for me to hit as some take profits. So now if it takes like 2 weeks, 3 weeks to retrace into the downside, the moving average will catch up. So key area is like this. We have right here a support zone, and right here we have a demand zone. This is the demand zone, this is the support zone. If we hit the demand zone, we will be breaking the moving averages, because it will not happen in 1 day or 2 days. It will take like 3 weeks to retrace into this area, and some negative data should come out to the US dollar or positive data for the Swiss franc in order for this retracement to happen, because this retracement needs sentiment to happen. But if fundamentals are still bullish and we hit this area, I might look to long this currency pair. Now with the CHF we have Euro, Pound CHF, Pound CHF. Okay, Pound CHF is consolidating right now. We will be hitting this area, very important area for me, because it's near the moving averages, it's in a demand zone, so we are in a clean area to take a position. But as I told you before, we have the retail sales and the inflation data coming. Also the pound surfaces PMI on Monday. So Tuesday, this pair, from a technical perspective, taking a long position on this pair is very smooth. Let's start with a grid like this. It jumps 100. So what I do, I put 100 right here, just to know the psychological levels I need to use. So we have the 1.2 area and we have the 1.3 area. At this area we have supply zone and support, and we are also still in consolidation. So this is like the lowest end of this consolidation, a great area to enter from. Also, at this level that we are in right now, if we break it to the upside, it will be a key area to take a long position, because we are in a demand zone. It will depend on the data how will come out on Monday for the pound, and the retail sales for the Swiss franc, and the inflation data on Tuesday. And the inflation data will play the biggest role. So since this is a very near term trade opportunity, I will put it at the beginning. Okay, so let's see euro pound. It needs some time to retrace, and okay, also euro pound, put it like this. The USD pairs need some time to play out. Euro pound, we are at the high end of the resistance, but we are still away from the moving averages, so also it needs some time, but not as Euro USD and USD CHF. So pound CHF, very huge opportunity, and since I will be looking to long pound CHF, this would be an interesting area to take profits. Also, I trail my stop loss based on the 4-hour time frame, market structure, higher high and higher lows. Now let's continue. We have the Australian dollar. So we have AUD pound, AUD USD. So AUD pound, okay, so pound AUD, that I'm allowed to trade. Pound AUD, it should be a long position on pound AUD, but we are far away from the moving averages. Let's see. Okay, put one here, right here, like this. Okay, and it jumps 100 pips grid. This is 100 pip. So where I will be looking to see some entry positions at the 96 level and at the 95 level. Also, if we retrace into the 97 level, there might be an opportunity, because these moving averages might catch up to the upside, but there is nothing right here from a support area or a demand area. We have this very small demand area right here. Let's clean it. Okay, so this is a great area to enter from pound Australian dollar as a long position, but we will need to keep updating the COT data and the seasonality to see, and also the 3-month yield, to see if it might play out or not. Okay, also we might use the fibs levels, so retracements, fibs level area right here. This green powerful candle might retrace into it, some economic indicator coming bullish with the momentum, and we ride it to the upside. But for now, I'll just use supply demand zones, moving averages, support and resistance, and I'll keep in mind the Fibonacci level. interesting pair. We put it, needs like 2 weeks. USD Euro USD needs like 3-4 weeks, so keep it above it. And now let's go into AUD USD. Okay, AUD USD should be a short position. Let's see the grid first of all. Okay, 50-50 jumps. I do put 50 right here, so every 50 pips there is a psychological level. So we have the 65 area, important area, and we might see retracement into these areas right here because it needs like 3 weeks for retracement if the retracement would happen. So the 64 area is very good also, and we have a very huge big right here supply zone. Okay, so this would be the supply zone. We have right here consolidation area with a resistance zone. Okay, let's use, okay, that's good. Now we mark it, it needs also some time, so it will be up above right here. So these are the 6 pairs that I'm looking at, especially the pound CHF during next week on Tuesday, and euro pound if it retraces on Monday into this area. Some inflation data on Tuesday comes negative, I might be looking to short this pair, but pound CHF is better. Although the euro and the Australian dollar are weaker than the Swiss franc, and the Swiss franc seasonality is bullish on January, but we shall see how it will play out. Now, coming into what I am learning, new things that I am learning, we have the central bank's balance sheet. So let's say from 2023 we saw a decline in the balance sheet which made the currency stronger. Now if we want to compare it with the TGA, the checking account of the central bank, and the reverse repo, they were fighting this balance sheet reduction with the reduction of the reverse repo and the TGA, just so TGA will increase and TGA will decrease and reverse repo will decrease in order for the net liquidity to stay the same from a central bank perspective. Okay, so assuming everything is normal and stable, the net liquidity is balance sheet minus TGA minus RRP. So if the balance sheet increases, the net liquidity increases, which will make the currency depreciate. If the TGA increases and the RRP increases, the net liquidity will decrease, which will strengthen the TGA. Okay, so they are inversely proportional, and it's like I was watching a TikTok video. It's like the three magnetic inductance motor. Okay, so they can be manipulated to become sinusoidal, so they don't affect the liquidity in the markets. But recently we are seeing some effect dumping into the market because the RRP is at its lowest, so there might be not a huge control on it, which will affect the liquidity in the markets. I'm still learning about it. I'm not expert in the balance sheet, TGA or RRP zone, but you need to keep learning and expanding your knowledge in order to have fundamentally a strong foundation and also build experience into the markets. This is everything for today's video. Hopefully it was insightful. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until next week, stay safe.